Hello and welcome to the latest video from Garrington. Due to COVID-19 and the current lockdown situation, it's not possible for us to bring you our normal monthly market review. Instead, we thought it would be helpful to put together a panel for an online discussion regarding some of the things we're already seeing in the market and how COVID-19 is impacting, and also discuss the trends that we're likely to see over the coming months. We hope you find this video helpful.
Hello and welcome to this special panel discussion regarding COVID-19 and its impact it's having on the UK residential property market. Well, today joining us is Laura Conduit, a partner at Farrer and Co Solicitors. Hello, Laura.
Oh, hi there, Catherine.
I'm also joined by mortgage broker Nicholas Ford from Charles Cameron and Associates. Hello, Nicholas.
Hi, Catherine. Delighted to meet you.
And finally, but not least, I'm also joined by Garrington Property Finders CEO Jonathan Hopper. Hello, Jonathan.
Catherine, hi.
So thank you all for joining us today. Clearly, we're living in unprecedented times. And for anyone either trying to purchase a property or even contemplating moving, these will equally be challenging times. I'd first like to turn our attention, though, to the here and now, actually what's going on today and how COVID-19 has affected the market. Laura, based on what you're seeing in your area, are transactions still taking place during the lockdown?
They are. The fact is that legal due diligence is still possible, so we're able to carry out all of the usual searches, raise inquiries. The land registry is still open for business, albeit working remotely. So we are still exchanging contracts. We are seeing corona clauses being put in place to allow, in most cases, for a delayed completion date or even a long stop completion date. And there's a lot that is still possible, particularly with vacant properties. Probate sales are obviously more straightforward, off-plan developer sales. And generally, if we've got a motivated buyer and seller prepared to work together collaboratively, then it's all still happening.
So what sort of types of transactions are still happening?
Everything, really. There are some investor sales on my desk at the moment, where clients have extended leases and refurbished the property, and it's sat there vacant. So it's possible to perhaps carry out a video viewing of that. And in some cases, clients are happy to buy unseen, where they're very familiar with the development and where they don't want to lose out, particularly on very sought after developments. And I've got a large country house that I'm buying where it's the client's dream property, and they have searched for it for many months, indeed years, and they're not going to let a virus get in their way of going ahead and exchanging and eventually completing on that transaction.
Now, Nicholas, based on what Laura has just been saying, it appears lenders are open for business, but what level of appetite are you seeing amongst the banks right now? You're
absolutely right. They are open for business, and they've been open for business throughout, to be honest with you. There was never a situation where they weren't lending at all. Certainly in the early days, the first week or so when we had the two base rate reductions within 10 days of each other, clearly that was, people were a little bit spiked by that, and lots of lenders withdrew to sort of 60% loan to value. The good news is that gradually that started to come back. And in actual fact, today is a really good day to be recording this, because the Halifax, Nationwide, Clydesdale Bank and Santander have all announced that they're now lending back at higher loan to value levels. Now that is absolutely terrific news, because clearly for a while we were working mostly around 60%. That is simply not the case anymore. And with Halifax back in, particularly up to 85%, that is really good news. So it's very encouraging, I think, how quickly the banks have been able to adjust to where we are, to this current situation we're in. Just really good news.
Just turning to Jonathan, we're hearing that finance and conveyancing options remain open, but all of this surely is the confidence levels amongst buyers. What trends are we actually seeing on the ground so far, Jonathan?
Very mixed at the moment. We've seen a combination of some buyers being scared off, but a lot of buyers are actually taking quite a pragmatic view on life and are prepared to just wait and see. The market started in fine form at the start of the year, and there's very much talk of a Boris bounce, and the predictions were that this was going to be potentially a bumper year. So there's a lot of pent-up demand that's been building up whilst we've had the Brexit situation in the background, and there's a lot of people who had put plans on hold who had decided 2020 was going to be the year. With the interruption that we've now seen and the lockdown, that's obviously brought plans to a crashing halt for most people. You can't get out of your own house, let alone into somebody else's. But it hasn't taken away the desire. But there's a lot of contemplation going on at the moment as to what's the right thing to do. I think some people are going to place their plans on hold till later in the year. Others are going to see it as a buying opportunity and less competition in the market and a softer market to operate in. And others are just want to get on with their lives and want to move. And there is obviously that overarching concern that you may see prices fall in the short term. You may not, but you may well see them fall. And they're willing to take a view on that actually they're looking to buy a home, not just an investment, for the next 10, 20 years, and they're prepared to take some of that short-term volatility if, as per Laura's example, it's someone's dream home, they've been waiting for a while to find it, and there's now an opportunity to buy it. They are just getting on with it. So it's a real sort of mixed bag. I think the market is in sort of three phases at the moment. We had the shock factor when we had the lockdown. We're now adjusting to that as to what a new reality looks like. And then there's going to be the question of what does a recovery look like, which you ordinarily assume it's going to return back to where it was. Now we've got to decide what does the new norm look like.
So we've just discussed and touched on what's happened so far. How are you expecting the market to perform and change in the coming weeks? I know it's hard to say for everyone at this point, but Laura, can I turn to you first on this?
Yeah, I think Jonathan hit the nail on the head by saying it's a mixed bag. I think we are expecting to see fewer new transactions during the lockdown period, purely because there is a limit to what people can do if they can't physically get into a property to view it. But we are still seeing some activity. We're advising on pre-offer due diligence in some cases at the moment. And we're doing kind of quite fun and interesting things such as option agreements, exclusivity agreements with a significant long stop date, and other inventive things such as managing to agree a completion date with the seller leaving some of their belongings in one sealed off room of the property for a period of time. Yeah. So we're being inventive in the hope that those people who are still in the market to buy and sell need to be helped, need to be advised, and that's what we're here to do. We are still seeing, we act for a lot of private banks and also for borrowers on their refinancing, and we are still seeing a fair amount of activity in that lending market. And the only question I think there is whether the banks are all accepting desktop valuations, or if some of their processes are going to be on pause until those valuers can physically get into the properties. But that's probably one for Nicholas to comment on more than me, because you'll see more of that.
Indeed it is. Yeah, no, thanks very much for handing that one to me. So desktop valuations, automated valuations, drive-by valuations, whatever you want to call them, the lenders are trying to use that as much as they possibly can. They want to carry on lending. One of the fundamental differences here between the financial crisis of 2007, 8, 9 is that the banks have money to lend. The banks have money to lend. They want to lend. Interest rates are as low as they've ever been. They're still historically low. So that's a very, very positive thing. We're finding with automated valuations a bit of a mixed bag, really. I had a case auto valued at 1.3 million on a house in West London, and the offer was issued by the Bank of Ireland today. So that's the sort of thing that can be done. Anything is possible with an auto valuation. The sort of the science behind it and the criteria behind it, it varies, and you never really know quite how it's going to go. Sometimes you think, oh, well, this one will definitely auto val. Another time you think, well, I'll never get an offer on that, and then it comes out. So, you know, that's changing all the time, and the lenders will adjust to that as we go along as well. They're learning just the same way as we are, really, as we go through this day by day, week by week. But they're incredibly proactive, and they're doing everything they possibly can to keep the market moving. So, you know, that's really encouraging, and we're certainly getting some good results on that. I think the the thing is, I think if you want to buy somewhere or you want to remortgage, I don't think you should delay. I think you should crack on with it now, because even if the auto valuation isn't carried out, you will be put in a queue and you will be towards the front of that queue rather than waiting 6, 8 weeks, 10 weeks or whatever. Because obviously when we're finally let loose again and the surveyors can go to the properties, you know, they're obviously all going to be unbelievably busy.
Yeah.
So now really, if you want to kind of put an offer in, and we've had offers, we're still getting offers going in, maybe stuff was viewed, you know, before the lockdown, and maybe they weren't quite sure whether they wanted to go for that property. They thought about it now and they thought, yeah, no, we would like to go for that property now. So we're certainly having offers, you know, put in on that basis. But we will keep going, and there will be business still to be done. And remortgage business particularly is important. If you're coming off of a rate, within the next 6 months, I would strongly recommend that you look to do something as soon as possible, because if you did a product transfer with your current lender, that will be based on the house price index figure that your lender has for your house now. So Jonathan was saying earlier, will prices go down? Won't they go down? That's a question that I've been asking for the last 25 years since I've been broking, to be honest with you. It's always on the table. You know, will they go up? Will they go down? My honest opinion, they might come down a bit. We may see a small correction, but, you know, you never see this, you know, there's always, you know,
There's always something.
There's always something. There's always a commentator somewhere that says, oh, it's going to go down 25%. This is the crash. I've never really seen it.
Looking ahead, Jonathan, which groups of buyers do you believe will be most active, and why would they be?
I think the period we're going to see in the short term is the market will be characterised by victims, survivors and predators. So the predators, I think, are going to be first to sort of reveal themselves, and arguably they're already out in the market looking. There are investors, developers at the moment that are looking for people that are willing to trade the price associated with taking on board their risk, but the value that someone's willing to go down to for certainty. And there's quite a few people that actually would value certainty and being able to get on with lives, whatever that motivation for a move would be. They're willing to take a view on that price. So I think we are going to see deals being done in the next quarter that are going to be your more risk-conscious buyers that are prepared to take those risks because they've got other driving forces sitting behind their purchases. The more risk-adverse buyers, I think, are going to sit a little bit longer and are going to want to see how this is starting to pan out. But unlike a lot of sort of financial crises that we've seen previously, there's a very different dimension to this in terms of there is the practical consideration that nobody yet knows what the constraints will be once they lift the lockdown. Will we see free movement? Will you be able to go and physically view a property again? If we look at what's happening at the US at the moment, estate agents are seen as key workers over there because of the impact that the property sector has on the wider economy. And realtors, as they are over there, are actually able to go out and do viewings, but those viewings are very constrained in how they're being conducted. There's no open houses. There's PPE being issued to people when they're viewing. The owners have to leave the lights on, cupboards open, and leave the property. Everyone's having to sign disclosure forms before viewings can take place. It's a very controlled way of working.
Yeah.
So if I were a betting man, I would suspect that we will see something similar introduced into the UK, and therefore actually that may not suit some types of buyers, downsizers, for example, who are maybe socially shielding at the moment. So you've got a different dimension going to affect market behaviour over the next 6 to 12 months, I suspect.
It's very interesting, all the topics we've covered so far. The most important factors going forward, what do you perceive those to be in the market? Laura, can I put that to you?
Yeah, I think the duration of this current lockdown will actually be key. And whilst we've currently been told we're in the second of a 3-week period, I wouldn't be surprised if that does continue. So for us, I think movement in the market has to be unlocked by lockdown ending, or by, as Jonathan was saying, certain restrictions being lifting, and that current government guidance on moving home would need to be adapted and changed to allow for viewings to take place safely whilst continuing to maintain social distancing if necessary. And after that sort of period of time, it's going to come down to general economic confidence. and whether people feel it's the right time for them to be going ahead. The interesting thing is that everybody's working really collaboratively at the moment. Everybody's working in new ways, in different ways. And I think that's giving us a really great foundation for, transactions to be happening post-lockdown.
Fantastic. Nicholas, what are your views of, or any advice of to anyone watching this going forward?
Yeah, no, I think everything Laura says there is absolutely right. I think it's really interesting to see how well everybody's worked together, how everybody is singing from the same hymn sheet, which can only be encouraging, because we are, let's face it, still a relatively short period into this extraordinary situation. I hope that this will recover fairly quickly. I hope the lockdown will be lifted reasonably soon, but we could well have another 3 weeks perhaps beyond where we are now, or perhaps slightly longer, but maybe not too much more from that. So I would hope that the recovery would be pretty quick. Jonathan mentioned the Boris bounce, and we certainly felt the Boris bounce in January and February, without a shadow of a doubt. It was busy. It looked like it was going to be something like a record year. So the pent-up demand is there. The demand is always there. We had the demand from Brexit because all of the uncertainty for the years and years around that. So that pent-up demand never really goes away. The supply never increases. The demand is always there at a certain level. So I think when we can get out of this, I think we can get back to having those strong months that we had in January and February, and let's hope maybe that is perhaps even later this year. I wouldn't like to think we could go right throughout a whole year like this. That would be very frustrating on so many levels. But I think the banks are, as I mentioned, the banks are very keen to lend. So I think that's a good thing, and people do have the appetite going forward. And the lenders will move quickly. They've made some restrictions on how much you can borrow, because of they're not really taking overtime commission bonuses into account at the moment. So if you're relying heavily on that, that's a little bit tricky. Having said that, I think as the banks have already proved, in fact, they really they're prepared to reverse their decisions very quickly. They're not hanging around, so that's good news. What I would say is it's always been very, very important to seek independent mortgage advice when you're looking to remortgage, buying an investment property or a residential property. Now more than ever, you need somebody to lead you through that minefield. It's a moving target. Rates change day by day, policy changes day by day, situations in terms of viewing change day by day. So more than ever, you need somebody on board that is independent and has an overview of the whole marketplace.
But Jonathan, your last, any parting comments for anyone watching?
I would just build on what Laura and Nicholas have said. I think this will be the year of the trusted advisor. There's going to be a lot of confusion in the market. There's going to be a lot of uncertainty. If you're trying to base plans, you need reliable information upon which to base those plans. And I think what we'll see over the coming months is a lot of contradictory data in terms of economic data. Average house prices, I think, are going to have little value for making an assessment of the market, because they're going to paint a national picture. And you've got to look at things at very much a micro level. And within those markets, there'll be subsectors as well in terms of different types of properties are going to perform in very different ways, because buyers are going to perform in different ways. So I think you really do need to dial in and get clarity and confidence on your own position, what you're considering purchasing or selling, and make sure that the decisions you're making are well-informed ones that are sort of built on solid data rather than hearsay or newspaper headlines. There's going to be confusion in the market for sure. And I think this is going to take longer than people maybe are thinking. We're already having discussions about how the market's going to recover, and that would assume it will just pick up where it left off. I think the nature of what we're dealing with here is going to mean that we are going to deal with a problem that will be in our lives for some months to come. And because of that, there needs to be a pragmatic way of thinking. But I totally support what Laura was saying earlier. The energy and drive and positivity within the property market of people wanting to work together to help people make their dreams come true and to move house. There's a real desire to collaborate. So it's going to be interesting times, but I think we'll all rise to the challenge well, and hopefully life will get back to some sort of normality soon.
Absolutely. I do think, absolutely, you're all pointing out that there is a camaraderie with everyone in the industry, and we're just all helping each other. And I think that's across the board, not just in the property market. Well, thank you all very much for your time. Clearly having some expert advice over the coming months is going to be essential to making a well-informed purchasing decision. I hope you found this video helpful, but if you would like some more specific advice from Nicholas or Laura or Jonathan surrounding your own property plans, please do get in touch with any of our panel experts following the links shared with this video. And thank you very much for watching.